Good morning. You're watching The Market right here on ET Now with me, Aisha Faridi, Anisha Jain, Pankaj Podar in the studios today. The STX Nifty this morning, after that rout that played out for our markets, is indicating just a mildly positive start right now, or rather muted start. We're holding up just about 0.2%. But lots has happened overnight. Of course, the kind of correction that took place for our markets, the fact that we just about managed to cling on to that crucial support of 17,500 into trade yesterday, following all the nervousness which was prevalent across the global equity markets. But the good thing is, this morning you've got a decent handover, and I say decent because it's not a runaway move by any standards. But yes, at least the sharp selling seems to have stalled for global equity markets, and hopefully for us as well, going by the STX Nifty. So the Dow, the S&P, the Nasdaq in fact was marginally in the green and just mildly soft for the Dow and the S&P. The Fed minutes, that of course has been the key takeaway, and that's what global markets have been reacting to. And a few officials do back the 50 basis points hike. They said that upside inflation risks are a key factor shaping the outlook going forward. And almost all Fed officials did back a 25 bips hike at the last meeting, although they seem to be indicating that the pace now should be slowed down. And I think that is what the equity markets are liking right now.
Oh, well, yes, and that was similar commentary coming in from the RBI minutes as well, wherein they said that focus on growth should also be there and the foot should be on the brake rather than the accelerator with respect to rate hikes. And that's something that the markets would like, that perhaps the worst of, the rate hikes is behind. Though we are not done yet, there was a bit of hawkish inkling as well. So we need to watch out for that. And that's what the markets are actually watching out for, because otherwise it's a bit of a listless market that we are witnessing at the moment. It's been in a very, very narrow range. We have seen that the market was near the lowest point yesterday when we hit around that 17,530 mark. Of course, we closed off that and managed to hold on to 17,550, but the range is something that we continue to hold on to. There was a sell figure coming in from the FI yet again yesterday, but the good news was it wasn't a very large cash sell figure coming in. It was just around 580 crore rupees. So the action clearly was in the F&O space more, and that's obvious given the fact that today is the monthly options expiry as well. India VIX actually surged substantially yesterday, and that's something that the traders and the technical experts would watch out for. So it was up around 11% yesterday and reached the mark closest to 16. But having said that, it's again the range, Pankaj, that we have been witnessing. We have been stuck in that range, and for now it doesn't look like we are getting out of it, and if at all, it might be on the downside, it seems.
Absolutely, the range was there and now the range seems to be breaking down. So that's essentially the first thing. But, you must not forget that there is expiry, news flow is on the lower side. So, that's something which also one has to take a note of. It's an absolute listless market. It's really no major trend. However, yesterday there was some visible trend that it's going on the downside, or there is some excessive selling pressure. And once again, led by, some sort of, some sort of unwinding that you broadly saw in some of the larger names. Today is the last day of this expiry. Adani stocks will be in focus because I think from the 1st Feb they were the ones to fall. 23rd I think was the first time they fell, 24th of Jan. And then I think 1st Feb you saw that renewed interest. So the full new series, the full impact would probably come in today. This is the first time that bulls will not be under control of this group name, or bears would have an upper hand because of the price movement. So let's wait and watch how do they react.
Okay, for this morning at least it seems that there is going to be some sanity, and at least that sharp fall is going to get stalled. But let's read a little bit more into the Fed minutes, and we have Anurag Singh from Ansett Capital joining in on the show right now. Anurag, hi, morning. Great to have you in the show. Are you surprised by the Fed minutes? Considering the fact that almost all officials did see benefit of slowing rate hike pace, that comes as a bit of a surprise, I guess.
Yeah, so Aisha, I think while there was a consensus on 25 basis points, I think the important point is that few members, we don't know how many, but few of them were looking at 50 basis points. That means that at some point there's not a huge consensus around whether it should be 25 or 50. At least the debate is welcome. And more importantly, I think at least all of them have said that ongoing rate increases will be necessary as long as the battle is won. And I think which is where most of the puzzle lies actually. So there's nothing much you can take out outside of this, Aisha, but I think much of it lies into the data we all can see, and Fed is also subservient to the data. So I think we'll have to continue watching that.
We're also listening into the commentary that came in from the Fed member Bullard yesterday, and he's working with a terminal rate of 5.375. Do you think that's a reasonable expectation, or is it expected to go even higher because 6 is now being talked about?
So Anisha, look, I think if we try and take a step back, and I don't blame Mester or Bullard. They are really talking the tone that they want to send the message at this point in time. But I think the same Bullard, if he notably quoted in November, December 2021 that probably by September of 22 we'll be at 0.5%, and we were at like 3.5% by that time, right? So I think they just are trying to really tone down the market signals. I think maybe the markets read too much into the disinflation word from Chair Powell, and that's what they're trying to do. But ultimately, Anisha, my message is that even the Federal Chair or the Federal Reserve officials would really can't, they will find it hard to say with certainty as to what will be the rate hike, right? Because imagine this is a problem after 40 years, US has seen this kind of inflation. Nobody in their careers have managed this, right? So ultimately, the end game is that they really do not know. Their predictions in the past have been sketchy, to say the best. I mean, they've been just trying to catch up with the inflation in the from behind. And I am of the camp that this is not going to go out in a hurry. I have pretty consistently held this view that I see this inflation rising up even now. In fact, it has caught up more speed in Jan 2023. So that's even worse.
Right. Anurag, when we just talk about inflation, you think 6 months down the line, what will be the inflation number? That's something which is keeping the markets jittery, or any of the RBI commentary, any other commentary that you're getting is difficult to predict now, because in 6 months, what will be the impact on demand and inflation is the key question.
So Pankaj, I think, and I think, look, whoever figures this out will make a lot of money, right? So I think this is a conundrum. But I think look at the data we are getting, right? Since this last minutes, we have had very hot jobs data. We had 3% spike in retail sales at the back of 22% hike in sales numbers for the past 2 years. Then we have had very hot CPI and PPI data. Regardless of what people are saying, I find it very puzzling, Pankaj, to figure out as to where in CPI or the PPE the inflation is coming down. Look at I want to leave with this thought that at the core of everything, Pankaj, is the wage inflation. And wage inflation is more about expectations. And we see very clearly, I think I'll just give a quick example of Walmart results. Sales rising 7%, but that's pretty much kind of the inflation that they have taken. Now, who will break this cycle of inflation where employees expect 5% inflation, repeated the wage hikes repeatedly? And if the employees are paid 5%, then of course the customer will have to pay 8% inflation, right? So that's the conundrum, Pankaj, we are on. I am of the camp, which believes that we really need a very strong. I don't want to, wish anybody away, but again, we guys are paid to be right, not to be bullish or bearish. I believe that we really need a serious recession. Otherwise, we're not going to break the cycle. And look, Federal Reserve has been at it for the last 1 year, and look where we are. Pretty much nothing, right? Limited progress.
Right. How would you rate India within emerging markets, what we have done in 2022 and, going into this global high rate environment?
So Pankaj, we did phenomenally well. And I'm saying we, still owning the wearing the Indian market hat. We did phenomenally well. I think when the entire markets, and look at China, Brazil, and, even US, we had like 20 to 30% fall. Here, India just managed with like a 2-3% fall, or not even that, right? So I think it was phenomenally well. But I think at the back of it, they were phenomenal earnings, right? Nifty earnings grew from like some 450 to 820, 830. So I think those valuations were warranted, and India always gets that that stability and predictiveness of the earnings, right, compared to some of these other markets. But I think, Pankaj, even there, I've had this view that, look, we've gone little ahead of fundamentals. We are expensive. And I think on your channel, I've been talking for the last 1 year that there's nowhere to go. once we touched 17, 1800, 18,000 on Nifty. But I think if you look at it on a larger context, Pankaj, I think if we kind of went from 11,000 in 2018-19 to like 18,000 now, I think that's a good rise. So we really need to take a breather and settle down for a bit.
Sure. Okay. Anurag, great to have you on the show as always. Let's see how long this breather actually lasts. Going by the market movement yesterday, not just for us, but across the globe, it seems like it's going to be a bit of a bump here. But banks' margins may have peaked. That's the word coming in from top market experts. Let's hear out Seshadri Sen as well as Vinay Sharma on their take on banks.
We have always been selective on PSU banks and we have preferred large banks over the mid-sized banks. But on an aggregate basis, if you look at PSU banking space, we believe it's in good shape for some time to come because one, uh, the deposit franchise of PSU banks still is very strong and given the scenario that we are talking about, where deposit franchise actually plays a very important role in determining margins and earnings of banking sector over the next few quarters, we believe this deposit strength will play out over the next few quarters. And therefore, PSU banks are in a decent shape, given that we are still sanguine about credit quality and we do not expect credit quality to show any signs of stress. Given the recent correction and the FII outflows that we have seen over past few months, some of private banking names and some of the large PSU banks have again become reasonable in valuations, and there is scope for some re-rating as and when this beliefs comes back that we are in the middle of a benign credit cycle and there are no credit issues at this point of time, and earnings will remain strong. So we believe that there is some potential of re-rating possible in banking sector.
Certainly, some of the assumptions are getting challenged. Let's start with bank names. With the way deposit rates are going up, we saw that banks reported fairly strong NIMs, and they may report another quarter of strong NIMs given that the RBI may hike further. But the markets are looking ahead and seeing the deposit rate hikes and know that this is not sustainable. And from the latest, the first quarter of next financial year, you're going to see some of the froth go off the NIMs. And therefore, you've seen a lot of the bank stocks not perform. We think within the banking sector, you have to look at the quality names and deposit franchises which have been ignored for the last 2 odd years will come back into fashion this year. Strong deposit franchises will get rewarded this year, which has not exactly been the case last year, right?
When last year we saw that also. PSU banks are ultimately strong deposit franchise.
Yeah, I mean,
they did very well.
Within the private space, at least the strong deposit franchises were underperformers.
With the exception of one name.
Yeah, I mean, one or two or even three were relative underperformers last year. So I think deposit franchises will get rewarded. The PSUs have re-rated, but that's part of a different cycle, and from here on, risk reward is probably not as attractive as it was last year.
It's the day of the monthly options expiry, so let's lean on our technical experts Nooresh Merani as well as Kunal Bothra to wade us through the volatility that we're expecting in the markets today. Kunal, you go first. At least 17,550 was sustained yesterday. Today, SGX Nifty is suggesting a bit of a positive start. If it does open in the green, what's the trade?
So on the index front, Anisha, I would probably expect the markets to get into a slight bit of a bounce over here. 17,500 could act as a support over the near term, and I think most of the indicators and the stance of the indicators which are into an extremely oversold territory indicates that possibly this could be a decent bounce on the indices, given the fact that if we see any major sector moves which comes by. So I think the two sectors which I would particularly be keeping an eye on would be IT as well as auto. And if there are stronger names which emerge as a breakout potential or as a recovery potential, then I believe that the bounce can extend for the indices. So as of now, would play out for 150, 200 points plus bounce on the Nifty from that 17,500 mark.
Right. Nooresh, hi, morning. Further selling, you think, or looking at the SGX Nifty, you would feel that's going to abate a little bit today?
So overall, the view is at 17,500, 600. The risk reward is in favor for a buy. The recent low on the budget day was 17,350 to 400 band. The bank nifty came very close to 40,000. The low on the budget day was 39,500 and also before that. So this should act as a support for the near term. And same is the case with global markets. US markets like Dow Jones has come very close to that previous support of 32,500. So in this band, the risk reward is in favor for a buy. We would expect a bounce back from here on. Whether the bounce back goes towards 17,900 or all the way to 18,150 is what we look out for. So this is the view that at these prices accumulate Nifty as well as a lot of stocks look interesting.
Right. Nooresh, when we just look at, the expiry today, and considering after really a long time, a lot of large cap stocks have underperformed, a lot of F&O mid cap stocks have fallen. How would you go in the expiry? You think majority of the impact is done, or you think that today or tomorrow could be important ones and how people make positions will be important to track?
So I don't look at the expiry for a day trade most of the times, but what I'm looking at is when the correction is already played out, it would be interesting to see whether the same sort of short position continues in the next month for FIIs as well. But overall, I think at these prices on the Nifty as well as in a lot of mid-cap, small-cap stocks in the F&O space also is very interesting. So if I pick up any, say, one stock if I like is an Indian Energy Exchange, the stock is down 50% from the all-time highs. So a lot of stocks have gone through a 40-50% correction, is not visible in the 10% dip in the Nifty, but a lot of mid-cap stocks and even in the derivative space, which have corrected 40-50% from the top, a bounce back is due for a lot of them.
That was the index call coming in. You like IEX, of course, but what are the other stock recommendations this morning, Nooresh?
So the stock-specific recommendations again come from oil and gas. So first is a buy on GAIL India. The stock has consolidated really well. Multiple times it has made bottoms around 85. A strong base has been made. And now is trying to make that breakout move for the last few times. And that point remains at 9,900 levels. We saw a move and then again flipped back. And now the base became 90. For the last 1 week, the stock is in a tight range, has not corrected with the markets. So expecting this to eventually break that 100 mark and go towards 105 to 115. Buy at current levels with a stop loss at 93 and a target price of 105 in the short term. Second is a buy on Indraprasth Gas Limited. Now, this is a stock which is still available at the prices of June 20. The stock pre-COVID used to be 500 levels. So the stock has done nothing for the last 3 years. Over the last 3 to 6 months has consolidated between say roughly 380 to 450 and has kept on making higher bottoms. The last bottom being at 420.25. And there have been 6 attempts around 445 levels day before also and 2 weeks back as well. Once that breaks out, we could see a quick move towards 480 to 550, which I expect it to do. Buy at current levels with a stop loss at 424.
Kunal, what stocks would you recommend this morning then?
So I'll go with the two sectors which I highlighted, auto as well as IT. Large cap names, TCS is something which I would suggest a contra buy on. The stock closed at the lowest point of the day yesterday, 3,400 levels, but the indicators have come back into an oversold territory, so I would expect a decent bounce from current levels. 3,480 is a target which I would eye on TCS, stop loss at 3,370. And the second would be a buy on Bajaj Auto. Even that stock has shown a lot of resilience. Yesterday the stock closed into a flattish to positive territory. So would suggest a buy on Bajaj Auto, 3,950 as an immediate target and stop loss at 3,800.
All right. Importantly, more than FOMC, even the RBI minutes for the previous meeting were released yesterday. Ankur, my colleague, has been scanning through that particular minutes, what various members said. Ankur, tell us more.
Yes, Reserve Bank of India Governor Shaktikanta Das has said that we should taper the pace of the rate hike in the considering two scenarios. First one is that we need to give time for our policy actions to work, and apart from that, second reason is that it would be premature to pause currently, because later on one can say that RBI is caught off guard for controlling the inflation. Apart from that, he has also mentioned that it is necessary to preserve the stance of withdrawal of accommodation to ensure a decisive process of disinflation in the current scenario. One of the vocal members against MPC member has been Jayant Verma, and this time also he has said that monetary policy in his view has become complacent about growth, and he fears that in future we may not face the brunt due to that. Now 25 basis point rate hike he has opposed about the decision of majority of the MPC members, and he has said that a repo rate of 6.5% likely overshoots the policy rate, and which needs to achieve the price stability. In the past also he has mentioned that there needs to be a pause in the rate hike so that the impact can be seen. RBI Deputy Governor Michael Patra has also said that while we should go for rate hike, but the foot must remain on the brake. Now it is important that there is a thought that in the hindsight later on there we must also look to pause whenever that happens. Now the stance of monetary policy will need to remain disinflationary till inflation is returned to target, and he says that first target should be returned to the 4 to 6% scenario.
Okay, so those macro comments is something that will definitely be in the spotlight today as well. But there are a lot of other cues to watch out for, a lot of stock-specific action, but we'll discuss all of that after this very short break.
SGX Nifty is absolutely flat with a positive bias, but as we've been highlighting, it's an important expiry day. Fed minutes, RBI minutes, all needs to be digested by the markets as well. But meanwhile, my colleague Aishwarya spoke to the CEO at Metro Brands, who says that he's seeing a huge shift in the footwear market, which is becoming organized on the back of regulations coming in and increase in GST rate. He remains optimistic that Metro Brands can expand a total of 300 cities in the near future.
What we're seeing is that they are upgrading their what they're buying, right? I think one thing that COVID taught a lot of people is I don't want a lot of stuff, but I want some good stuff. If I'm going to buy stuff, I'm going to buy some good stuff. So we're definitely seeing that in the consumer behavior. But there's also a huge shift going from the unorganized sector to the organized sector. You know, the unorganized sector in India is roughly about 70% in the footwear market. We're seeing that shift happening as GST rates have increased, as there's been more and more regulation come in. It makes unorganized sector a little bit harder to compete with. What we're seeing is the consumer is not resistive when they see value. So we're not looking at it as premium product for the sake of premiumization. We're seeing it more as creating products that have value, but at a much higher price point. And the consumer is not shifting away from that. As far as basket size goes, we continue to see improvements in the number of units that a customer buys when they visit our stores. That's driven by category growth. That's also category growth both in footwear, so because we're selling more athletic shoes, more casual shoes, so that category growth creates basket size increases, but also from our accessory business that continues to stay quite robust.
In terms of store count, what is the count right now at, and what's your outlook for this year? Is it going to be aggressive expansion? How is it? What does it look like?
So we reported in Q3 that we opened the highest number of stores in the history of Metro Brands. We opened up 46 new stores net, and that takes us for the annual total so far of 96 stores. Today we're at roughly about 720 stores. We guided the street that we would open 260 stores from when we went public back in 2021. For the first 3 years. So we're definitely on track to hit that number.
That was an exclusive interaction with the management at Metro Brands. Lawrence Belanco, technical note, who writes at CLSA, has shared his view on various things, the likes of Nifty, US 10-year yield. What he's saying is that he believes that the price are oscillating in a narrow range. They believe that consolidation for Nifty is at the upper half of 2021 to 22 average. First time spoken about stocks. So bearish charts for Tata Motors, Maruti see several lower highs for Tata Motors in the future. It's currently trading below 200 DMA, and for Maruti, the recent rebound from December low is something which people should look at in terms of downside risk opening further. Below 8,940 and 9,000 range, they see derating in Maruti to continue.
Okay, so that's the take coming in as far as what CLSA has to say, but a lot of stocks are going to bust today, so let's address some of those stocks. Tata Motors is, of course, the first one that we are going to watch out for. That's because they are looking at getting more, investors in the EV arms. In fact, they have reached out to private equity players, even sovereign wealth managers, etc., for the EV unit stake sale, and even the likes of ADIA, etc., have been, have been spoken with, it seems, because that's what the reports are suggesting. So that stock will be on our radar. Lemon Tree is the other one we are watching out for. They have signed a pact to establish a 47-room property in Bhopal, so that will also be interesting. Expect the stock to open in the green. Mahindra CIE, wherein the numbers were a tad bit mixed. On the bottom line, there's a loss, but remember, that's due to discontinuing operation. If you look at the profitability from continuing operation, that's jumped up almost 3x YOY, and even the revenue has shown a good jump, and margins also have come in better than estimates, so maybe a green tick there. HG Infrastructure will be in focus because they have been declared L1, or the lowest bidder, for a 530 crore project. We also are watching out for Sonata Software because they have made the biggest acquisition that they had in their history. It's almost a 550 crore acquisition coming in, and they are looking at buying 100% stake coming in for Quant System. It's an all-cash deal, and the company believes it will be able to add more clients to the top client list. It will help them to get larger deals, and it will add more capability in modernization and data engineering space, and the acquisition is expected to be completed within 30 days. So we're watching out for all of that as well. Let's go across to Pankaj Pandey as well. He's joining us to talk to us about some of the stock-specific action. Pankaj, I wanted to begin by asking you about Tata Motors and how the entire auto space is panning out. Do you expect that the underperformance of Tata Motors is set to reverse in 2023?
Hi, good morning. I think overall auto as a space is looking quite attractive to us. I think Tata Motors specifically, we have seen good amount of margin uptick across categories, be it JLR, be it PP business or the CV business. And compared to that, we were sort of anticipating a loss the last quarter, but actually they rolled out profit. Now, good part is that when you sort of look at going forward, both the segments, which is PV and CV, are looking attractive to us. So we are penciling in somewhere about 13% kind of a top line or volume growth, and about 17-18% kind of a volume growth. Now, EV is one business where we are quite hopeful on. So we have a target price of 530 on. In that, the EV business is valued at about 158 odd, and that was again on a previous valuation. So I think with China sort of reopening and domestic market sort of looking good for the next 2 years, along with that, the margin expansion, what we have seen in the last quarters, I think our sense is that this is one stock which can outperform most of the Nifty components.
Get your views on, Lawrence Belanco's thoughts, both on Maruti as well as Tata Motors. And let's first pick up on Tata Motors, considering that's a stock that you've been recommending. Below the 200 DMA, he believes that the stock is making several lower highs right now, and he does see downside risk on both Tata Motors as well as Maruti.
Yeah, I think the observation with the stock has already gone through a pattern of lower highs and lower lows. I think if I'm not wrong, from 550, 560 levels, where Tata Motors hit, I think 2021, when you look at the last 1 year of chart patterns, the stock is consolidating in a manner of making lower highs and lower lows. But then, we look at the broader pattern that from 60, 64 rupees odd from 2020 lows, the stock had done exceptionally well, moving up almost 8-9 times from those 60 plus levels. And then when you look at such kind of a meteoric rise in a very short span of time, the stocks, the sectors, they are bound to get into a time-wise correction as well as a price correction. But for Tata Motors, the only good part is that the stock has gone through more of a time-wise correction rather than a major price correction. So I think that's the only positive part for Tata Motors. I would still be bullish on the stock, and I think even at current levels, maybe the stock could probably dip back towards 410, 415 levels, but then I think that could probably be an attractive zone to buy the stock again.
Okay, in fact, since we're on the subject of Tata Motors, let's address an Economic Times story as well this morning. And the paper reports that Tata Motors has begun discussions with sovereign wealth funds and private equity investors to sell a significant minority stake in its EV division. And it's a slew of potential buyers that Deboshi Chaki is picking up right now. Deboshi, hi, morning. Good to have you on the show. Tell us, who could these potential buyers be? What are you picking up?
Thank you very much. Like we have reported, there are a clutch of sovereign funds and also global private equity investors. We understand there is ADIA and Mubadala from United Arab Emirates. There is Saudi Arabia's Public Investment Fund, Temasek from Singapore, and also global PE funds like KKR and General Atlantic. So they're all engaged in the discussions. Of course, there is not full certainty that over the number of investors who will ultimately invest. We understand that the ask is, around 15% to the last valuation round, which was around $9.1 billion. You remember last year, TPG was one of the investors who had invested in the EV business. So this time we understand the ask is around 10 to 15% premium from that valuation round. We also understand that once the deal closes, the proceeds of the sale, the money raised, will be used by the company to retire its debt. There is also a possibility that a small amount might come for the company as private equity, which will be used for the company's growth plans. But largely, the money raised will be used towards debt repayment, which is in line with Tata Motors' announced policy of becoming a zero debt company going forward. Which will obviously have a significant impact on its margins once it is able to retire a large part of its debt.
Got the point. Just wanted to understand, it's quite exciting space, right? EV to be in. We saw Tata Motors doing first fundraise, then M&M did a very big fundraise. TVS is in talks, and now you're seeing second round of Tata Motors, which actually shows that there is a lot of money to be put into R&D of these companies.
That is right. There is a lot of global interest in general around the EV space, and India being one of the most exciting markets, one of the fast-growing markets. There is definitely a lot of interest in investing in EV businesses, and that is probably the reason we are seeing so many transactions in this space, happening in a very short span of time.
Okay, Debashish, we'll let you go on that note. Thank you so much for joining us this morning. But on to some top fundamental ideas now. Himang Jani, Equity Strategist, Senior Group Vice President at Motilal Oswal Group, is bullish on APL Apollo Tubes as well as some Vardhana Motherson. Let's listen in.
Cap space, there are names like APL Apollo Tubes, Poonawalla FinCorp, Metro Brands, Lemon Tree Hotel. These are the names where we've seen a fairly resilient numbers, and where our outlook in terms of earnings for this year is very strong. So these are the names where we would be buyers at this point, or if there is a small correction, let's say 5-7% over the next few days, that will make them even more attractive. And from the large cap space, I think auto remains to be on the top of the list, and Mahindra, Samvardhan Motherson, Maruti, these are the names that we would be positive on. And of course, IT is something that we've seen some stability coming through. And we think that over the next few days, so names like TCS, Infosys, HCL Tech, these are the large cap IT names where we have a slightly more comfort because of the lower valuations.
Okay, just looking at the market texture yesterday, while of course the Adani Group entities got clobbered down and Adani Enterprises was down another 11% today, what would be intriguing to see is that given that today is the expiry weekly, what really transpires with this particular cluster today. Having said that, there were just very few hiding spaces yesterday. One odd Oro Pharma, Glenmark, Voltas, and maybe to some degree ITC fell a lot less than its other Nifty counterparts. That closed in absolutely flat for itself. But Pankaj, any buy recommendations that you would have? Any stocks that are looking attractive in this current decline if it were to excruciate or get a little exaggerated from these levels?
So I think from a sectoral perspective, I think we have started liking some of the PSUs, say for example NTPC or something like say ONGC. Besides that, I think our sense is that banking has been sort of struggling for some time. But given the fact that IT overall, since the US Fed is still hawkish, probably the kind of run up what we have seen in the 5, 6, probably 1.5 months in IT probably might take a pause, and banks ideally should sort of do better from that perspective. And you've seen banks sort of doing well, especially on the unsecured side of the portfolio. Most of the banks have been sort of inching up that portfolio. So NIM expansion can still sort of pan out in the next quarter. And valuation look reasonable to us. So we like something like HDFC Bank or Federal Bank. And then I think in some of the mid caps, say for example, Techno Electric is one company which missed out in terms of numbers, largely on the execution side. But our sense is that Q4 ideally should be a lot more better than what we have seen. We like some of the other names like Action Construction Equipment, largely from a overall capital goods perspective. And then within software, we like small cap companies like, say, Newgen Software, where the management is quite confident of delivering good double-digit growth over the next 2-3 years. So again, it's a very sort of a stock-specific market as of now.
Just looking at the Credit Suisse report on internet stocks, and they're saying that the internet economy growth is surely slowing down. Having said that, they do believe that they expect the e-commerce growth to actually start normalizing towards the trend line. They're saying that they like Zomato, given the favorable industry dynamics and push towards profitability, saying that they're still cautious on Nykaa because of the competition in its core beauty segment, and the reopening segments are the ones which are seeing good growth. Pankaj, I'm wondering, after the recent fall, which of these new age tech companies look attractive to you? I mean, be it PB Fintech, Delivery, Nykaa, or a Zomato or Paytm?
So we don't track any one of them. We have not been sort of tracking a lot of these names for a good period of time. I think we're still not very sure in terms of in terms of path to profitability, and so I think the only expensive companies which you were recommending was our Cramsphere, which was sort of trading 8 to 10 times. Beyond that, I think anything which is available 10 times sales does not look sort of attractive to sort of justify at current levels. So from that perspective, I think we are sort of slightly shying away from high P or high valuation companies and preferring to more sort of traditional players. Say, for example, NTPC, which is trading at 1.4 times book, or ONGC, which is trading at, say, 4 times P multiple with a 8% kind of a dividend yield, and probably an expectation that next year you'll see 4 to 5% kind of a volume growth panning out.
Okay, so that's the take coming in as far as some of these names are concerned. But Pankaj, what about the entire IT space and mid-cap IT specifically? A lot of niche names are doing well, whether it's Persistence, of course, Coforge as well as Tata Elxsi haven't done much this year, but they had run up considerably already. And KPIT Tech also seems to be on a tear of late. And this morning we have the news coming in on Sonata Software making that large acquisition. Is there any top name that you would want to recommend from the mid-cap IT?
So one name which we like is Newgen Software, where our expectation is, or the management is quite confident of delivering 20-22% kind of a top line and bottom line growth. So that is one stock what we are liking. Besides that, I think Coforge is one of our top picks, largely because this is one company which is quite confident of delivering 22% kind of a constant currency growth and likely to maintain 16-17% kind of a growth even a year after, and has got one of the lowest attrition. Then travel as a vertical, which is one of the biggest vertical, has been sort of doing well compared to pre-COVID. So I think this company looks a lot more sort of better. But like I said, in general, we have seen decent run up in the last 5-6 weeks for most of the IT names. So I'll not be really sort of chasing these names at higher levels.
Okay, so that's the word coming in. Newgen Software is something that you're quite positive about. But let's take a look at some of the other stocks which are likely to be big buzzers today. Of course, we talked about Tata Motors and Sonata Software, which is going to be on everyone's radar. You also have Mahindra CIE, which reported numbers, which on a top line basis and profit from continuing operation looks quite strong. Tata Steel will be in focus because they've acquired shares of Neelanchal Ispat plant, so that will be interesting. Gujarat Gas has hiked the prices of their commercial commercial PNG, so we'll watch out for that. And Greaves Cotton too has announced some leadership changes at the lower level, so we'll watch out for that. Apart from Orient Cement, wherein there was actually a negative news, they were earlier trying to set up a unit on the land with Adani Power. That deal or pact has been cancelled for now, so that will be interesting. And of course, delivery will be on everyone's radar given that big block deal happened yesterday. And is there any other further liquidity pressure that we should envisage is something we'll watch out for. But let's get you some more fundamental ideas now. Neeraj Devan, Director Quantum Securities, is talking to us about his top bets.
First 9 months, we've seen good growth, volume growth in the tobacco business domestically. And even the global business, that is the export business, has seen good growth because of good growth from the tobacco leaf business that they export. And the domestic business, which is the non-tobacco business, has also seen a 20% Y-on-Y growth in the 24/7 sales. So I think this is more because of the increase in mobility post-COVID. It's a debt-free company which has cash, if you consider the investment it has in mutual fund. So there's no debt on the books. And the future strategy is to grow all the three businesses, the domestic tobacco business, the international tobacco business, and the non-tobacco business as a 24/7 retail stores. So all three will see decent improvement going ahead also. So if you fairly see on valuation, even if you value it at 15 times 1 year forward, which has been the historical valuation, the stock can give you 30% return from these levels. So I have a target of 2,300 for this for 9 months, 9 to 12 months.
Okay, let's discuss more stocks which are going to be in focus this morning. And Citi has maintained a buy call on sale, opening an upside of 90-day, the catalyst watch on the stock. Let's take it across to Sharad, find out more details on Sharad. What makes them so bullish on sale?
Well, yes, Citi has come out with this report on sale and it has opened a 90-day positive catalyst watch. That means over the next 90 days, Citi is expecting that the share price is expected to go up on the positive side. Apart from this, they have given a maintained buy rating with a target price of almost 100 rupees per share. Now, they have stated that the EBITDA per ton, the operational numbers are sustainable at the current market prices if they are assuming that the coking coal prices stand at almost $350 per ton. Now, that is a raw material for steel companies. And of course, the 5-year average, if you see, Citi has stated that they are suggesting that the sales stock price is at attractive levels and there is a strong upside potential going ahead. Now, looking at the numbers, especially the sensitivity part, that is where the sale kicks in, and that is having a very high sensitivity as compared to its peers. To put it in simpler words, that means is like every $10 per ton change will actually impact the EBITDA numbers of sale by 15%. So that sensitivity level is very high. And now they're expecting that the domestic flat steel prices, that comes in the range of current market price of 59,000 to 60,000 rupees per ton. So any kind of upside move in the steel prices in the domestic space, you see there'll be a strong correlation going ahead for the stock price as well. That's what Citi is stating. And just looking at the stocks moving numbers, however, slight correction was there. Stock is trading below the 50 DMA, down 9% from the January highs, but the analyst community is still having mixed kind of emotions, which almost 44% analysts have given a buy rating out of the 27 analysts tracking the stock, with the 12-month target price combined at 93 rupees, indicating a 10% upside potential.
Right. Okay, Sharad, we'll leave it at that. Meantime, the NCLT has admitted an insolvency petition filed by IndusInd Bank against Zee Entertainment. Let me take it across to Ankur Mishra, my colleague, and get in more details on what exactly happened here. Ankur?
Yes, Zee Entertainment has been dragged to NCLT by IndusInd Bank, and now NCLT has admitted the petition of the lender. Now the claim is that as per the debt service agreement in which IndusInd Bank had given a loan to City Networks, Zee Entertainment was a guarantor, and according to that agreement, some amount needs to be kept in the account as per the guarantee, which Zee Entertainment failed to do so since 2019, and therefore a petition was filed at NCLT by the lender, not only claiming defaults from City Networks but also from Zee Entertainment. Now this is important because once a petition is filed, there will be due proceedings which will be conducted by the interim resolution professional, which has been appointed by NCLT, and all other creditors also can make their claims. Now, in a response to the queries which we had sent to Z Entertainment, Puneet Goenka, the CEO of the company, has said that there will be no delay in the merger with the Sony Entertainment, and all the due courses, all the due steps which needs to be taken will be taken for the merger, and this is guided by the legal advice which the company is receiving. Now it seems like that this battle may go to higher courts, and we need to wait and see whether or not there is any impact on merger or not.
Right. Okay, Ankur, we'll leave it at that. Pankaj, just wanted to get your thoughts in on the NCLT admission, Innocent Bank's insolvency plea against Z. I'm guessing this would be a bit of a negative news for Z.
Yeah, absolutely. So one is, see, even if you look at the last quarter, the ad revenue growth has been quite tepid, while it is expected to improve. But I think when you also look at the working capital, it's very difficult to sort of figure out if the company is putting a lot of money in the movie business, how the revenues will pan out. So, and then you have a lot of these linkages with the group companies, which is where things are not very clean, or we really do not have enough clarity in terms of who's going to share that burden. So from that perspective, while the merger is the only sort of positive thing to sort of look at, but I think you still have a lot of challenges with the company, and which is why the stock has really not been sort of doing the kind of performance what one would have expected post merger. And I continue to believe that it will continue to sort of struggle at current levels.
Pankaj, when we just look at how essentially some of these e-commerce companies have fallen, from the levels, are you looking that they are just trying to find their valuation? They may be buy, they may not be buy. But it's the first time in 2 years that you're seeing these sort of companies getting listed, this sort of supply coming in any shares. Do you believe they are in a space where they are just trying, the market is trying to find a proper PE or a price to sales multiple for them?
I think till the time we really do not have a stable period of, say, revenues and also margins and profitability, it's very difficult to sort of pin all the hopes on the future improvement in terms of margins and all of that. And I think the other challenge is that when you look at for some of these companies, it's not a wide space. I think except for Zomato, which looks from the perspective that it's a habit forming kind of a segment which they are into, and obviously they could have some bit of a pricing power. But whether you look at, say, delivery or a lot of other names, it's very difficult to sort of pinpoint or figure out that a B2B business like delivery will continue to have or will have margin or pricing power. So which is why we are still not very clear in a lot of these names, and which is why we have been not really sort of tracking a lot of these names. I think we still need some bit of a stable set of numbers to sort of get clarity and to sort of look at how things will pan out in future. So, which is why we've been avoiding this space for quite some time. Besides, obviously, valuation is still rich.
I'm just looking at the Adani Group entities and the kind of fall that they have had actually from their all-time high. Adani Green Energy has seen a fall of 82%. Similar has been the case with Adani Transmission, which has fallen about. This is just the yesterday's move. If we can just bring up the fall from the high, we had those graphics run up yesterday as well. Adani Total has fallen about 79%. Adani Enterprises, which yesterday alone fell over 10%, has fallen about 66% from its all-time high. NDTV down 65%, Adani Power down 62%, Adani Wilmar, which was one of the most fancied IPOs in the recent times, that's also fallen about 55%. Ambuja, Adani Ports, ACC, all anywhere between about 45 to 38 odd percent or so. Nooresh, do you sense that given that there's expiry as well, which is going to really act up on these names, we could see further pressure build in on the Adani Group?
So on the Adani Group, only Adani Enterprises and Adani Ports are in the derivative side of it. Adani Enterprises has come back all the way back to 1400, and the last low was 1000. It made a recovery almost to 2200. So I think much of the pain is over. I would not expect it to break below 1,000 as quickly. Adani Ports also saw a very strong recovery from 400 to almost 600. So that is some pressure which can come over there, but 500, 520 should hold over there also. But this is a tough sector to tough pick of stocks to actually watch out for because their volatility is all over the board. So the only space as of now which still looks interesting is that Ambuja Cements at 330.
Nooresh, let's not, okay, Adani Group of stocks, you gave your view. But what is your view on Tata Group actually, not seeing? It's just a function of flows. You believe names like Tata Motors, okay, TCS can move its own, but Tata Steel, Tata Motors, that as a pack can do well?
So as a pack, we need to look at all these companies are in different sectors and different trends are going on for a lot of them. In 2021, there was a re-rating moment for the whole Tata Group. I think that part is over and now every stock will move on its own. But Tata Motors and Tata Power is interesting for the fact that after making this huge move in 2021, they've gone sideways for the last 1.5 year to 2 years. So if you look at Tata Motors, it spiked up to 500, 550 levels back in September 21, and since then it has gone nowhere. It continues to be at 400 to 460. Tata Power, after going from 60 to 290, is now struggling at 190, 200. 6 attempts made around those lows. So yes, in the Tata Group, Tata Motors and Tata Power are the interesting names. Tata Steel is a difficult one given the cycle is over for a lot of metal stocks and it has been an underperformer now. So I would be watching out for Tata Motors and Tata Power. I continue to like Tata Power, which is where the risk reward is very interesting at 200 levels.
Pankaj, what will be your view as far as IT pack is concerned? We saw a rally in the large cap space after the numbers till now. Do you think the time has come to look at some of the mid cap ones?
I think on the IT side, probably, according to me, it's probably some time to sort of book profits because, see, when you look at US as a market, while these spends or TCVs have been good for most of the companies, quarter-on-quarter growth has been sort of on expected lines. Margin expansion of, say, about 100 odd bips for some of the companies was on expected lines. But I think the challenge is that if the US is going to sort of tighten or continue to tighten and your jobs data and inflation is not really sort of coming on expected lines, then our sense is that probably one needs to be a bit cautious given the fact that we have seen some bit of a rally in the IT as an overall pack. So from that perspective, I'll be slightly cautious at current levels. But having said that, whenever this volatility or clarity emerges from a US market, then IT could be one of the best contra plays to sort of look at. But till that time, I think it's probably a time to sort of book profit in some of the stocks which have rallied.
Sonata Software is the other one which is going to be in focus, and we flagged this off earlier as well, that they've acquired a Texas-based Quant Systems in an all-cash deal for 1,300 crore rupees. Now, one must give you a little bit of a backdrop because this is the biggest ever acquisition in Sonata Software's history. They've signed this definitive agreement with Quant Systems Inc. They're going to acquire a 100% stake. It's an all-cash deal. This is, of course, going to accelerate Sonata's capabilities in modernization, digital engineering space, etc. But yes, the valuations is something that could be debated, especially in the current market environment. Kunal, TCS is one stock that you're bullish on, but would you be looking to broaden, your exposure to IT and maybe look at some of the mid-cap IT names?
Yeah, there are quite a few. In fact, I think one of the top candidates which has emerged as a huge potential breakout is Tech Mahindra, which has been a huge underperformer. The last, I think, 1 week broadly, the stock has recovered from 1,050 to, I think, 1150, 1160 mark. And then from there, the stock has come back towards a retracement. I think that's a classical buy. The stock had given all signs of a positive breakout, price volume breakout, indicator breakouts, as well as a start of a fresh trend breakout. And even if it tries to cover up the underperformance, I would believe that there should be at least a potential 10% up move, which should be further left for the stock price. And if it starts to trend, then the returns could be far more higher for the stock. So, given the time frame of maybe another 2 to 3 weeks, or say broadly, I think 1 to 2 months, I would probably be bullish on Tech Mahindra. That would be the other stock, which other than TCS.
Tech Mahindra would be the other one versus TCS.
Yes.
And if you want to go down to the mid-cap list, a lot of other mid-cap names are, also in focus. And generally, we tend to see that first the large caps do well, then the mid caps in IT do well. It's been a trend that has been there for long. Any view on that?
So I think from the non-F&O stock, if I can call it, from the mid-cap space of IT stocks, Redington is something which I would be bullish on. I think from 200, 204 odd levels, the stock has corrected towards 166 yesterday. So again, a stock which I think has done pretty well for itself from the mid-cap IT stocks. If I'm not wrong, was one of the first ones to try and come back towards the previous major highs of 2021 and surpass those levels. So I believe at 166, the risk reward is again very favorable to initiate a fresh buy in Redington.
Let's just bring up one more big loser from yesterday, and that was Aditya Birla Fashions. Fell 5%, and in comparison to that, we've seen the word, how a trend, for instance, has actually panned out. Pankaj, I don't know where your biases lie when it comes to this entire retail play, but ABFRL versus Trent, if you could stack up both and tell us whether you're recommending a buy on any of these at this current juncture.
So Trent obviously has seen one of the most superlative growth. I think last 3 years the CAGR has been about 36% and so which is why they are sort of an outlier in the entire retail as a pack. And especially the Zudio format for them has been sort of doing very well. But compared to that, when you sort of look at the ABFRL or a number of other names, things have been softer for them. One, because overall we've seen good appreciation or the price hike has been quite aggressive. And our sense is that probably things will turn softer going forward for most of these players. And obviously, ABFRL also sort of competes with Reliance Retail in terms of acquiring niche brands and sort of trying to sort of do a massification of those brands. And so I think Trend is something which is quite expensive. I mean, when we sort of look at, say, between Shoppers Stop and Trend, Trend is nearly 3 to 4 times expensive compared to what Shoppers Stop is trading. So that is one which continues to sort of do well. So which is why we like that. But any kind of a correction, I think, will be a better buying opportunity. Shoppers Stop is another play which we like. One, the valuation is quite attractive. The other is that while we have not seen a very good set of numbers, but our sense is that as and when your value play from the perspective that if your homegrown brands are going to sort of do well, so that will sort of lead to better margins for the company. And which is why I think Shoppers Stop and Trent look good. I think rest of the other players probably will have some difficult time given the fact that price been quite high and probably the footfalls or the kind of revenue per square feet may not really match up to the kind of expectation what one would have.
Pankaj, we'll let you go on that note. Thank you so much for joining in. But since you were positive on
Thank you so
Shoppers
much.
Stop, let's also listen into the management as to what the outlook is. My colleague Aishwarya caught up with the Managing Director and CEO Venu Nair of Shoppers Stop. Let's listen in to the company's outlook and expansion plans going forward.
We are focused on the premium lifestyle space for beauty. Our promise to our customers is to bring the best of global beauty brands into the country. And an opportunity for us to do that, we are doing so by getting into distribution for beauty, and we set up a subsidiary under Shoppers Stop, which would have distribution rights, exclusive distribution rights in most cases for some of the best brands. NARS is the most recent addition to that portfolio and something which we are really proud of. NARS from the house of Shiseido, and it's a brand which is very well known and we believe will do extremely well in the country. Apart from NARS, and NARS would occupy the color, cosmetics, makeup space. On the fragrance space, we have got exclusive distribution rights for L'Oreal International Division's 8 fragrance brands.
What is next for Shoppers Stop? There are 90 stores. Last I remember, I think June 2022 was the last store expansion, and you have more than 500 brands now, across 48 cities. What's next for Shoppers Stop?
Store expansion continues to be strong. We had opened 9 stores till Q3. Today, actually, we opened our 10th store in Rourkela. That's the 97th Shoppers Stop store that has now opened. And we intend to open between 12 to 15 stores a year. That's what we have in our plan.
Okay, so that's the word coming in as far as management of Shoppers Stop is concerned, saying that the expansion and the store addition plan will continue status quo, and they are quite bullish on the entire beauty segment. But let's get some mid-cap bets from our technical experts now. Nooresh, let us know what your top mid-cap recommendations are.
Continue to be bullish on Indian Energy Exchange (IEX). The stop loss now revised to 140. Yesterday also was good volumes, and the stock held on into positive territory yesterday, even when the Nifty was correcting and the broader markets were correcting. Clear indications of strength in a weak market. So, a target of 170 in the short term, a stop loss at 140 now.
What about you, Kunal? What are the top mid-cap recommendations this morning?
So I'll still go ahead with Tech Mahindra. We discussed the stock earlier. That's a buy. Near-term targets for the stock would be kept at 1200 mark, and the stop loss for it from current levels would be at 1070.
Okay, so that was the top recommendation coming in from our technical experts. But let's talk about some national and international headlines in our News Fatafat segment. Massive winter storm hits California. Over 1,500 flights are cancelled and more than 2,000 flights have been delayed. Strong winter storm makes its way through the western and central states of the country. Meanwhile, the power supply has also been disrupted in parts of the United States. Wells Fargo has laid off hundreds of mortgage bankers this week as part of a sweeping round of cuts triggered by the bank's recent strategic shift. The layoffs included some top producers, including a few bankers who surpassed the $100 million in loan volumes last year as well. Bill Gates has bought a 3.76% stake in Dutch drinks giant Heineken, although the billionaire founder of Microsoft has previously said he was not a big beer drinker. The filing by the Netherlands Financial Markets Authority said that the shares were purchased on February 17th. Gates purchased the shares from Mexico's FEMSA, which is selling out of the brewing company.
And Pakistan is grappling with its worst economic crisis, and seems like China is offering a helping hand. As per reports, Pakistan Finance Minister Ishaq Dar has announced that China has offered $700 million loan to Pakistan. He also added that the amount was expected to be received by the State Bank of Pakistan soon. Also, the stare down between Russia and US is intensifying even as the war rages on in Ukraine and is close to a year. US President Joe Biden, during his visit to Poland, went on to hail the efforts of NATO member countries, calling their commitment rock solid. The fresh war of words comes after Putin cautioned of US of stoking the war and turning it into a global conflict. Also, another Indian origin candidate has entered the 2024 US presidential race. After Nikki Haley, Indian origin entrepreneur Vivek Ramaswamy has announced that he will be contesting for US top post in 2 years' time. And also, Team India will take on Australia in the semis of the T20 World Cup as they continue in their quest for a maiden title. The two cricketing powerhouses will clash in Cape Town with a spot in the final for the line. And the fixture is also a repeat, remember, of 2020 T20 World Cup final when Aussies thrashed India to win the tournament for the 5th time.
Okay, so the pre-open rates have settled and it looks like we are going to start in a bit of a green. Nifty is expected to be around that 17,574 mark. But let's take the index calls from our experts this morning, and it does look like that Kunal and Nooresh believe that there's still a buying opportunity which is available at the index level. The coach is a bit more tentative and suggests a hold. As far as Nifty is concerned, let's take a look at what the calls are when it comes to the Bank Nifty, because for Nifty the consensus call seems to be a buy despite the volatility that we have seen. For Bank Nifty as well, there is a buy which Nooresh recommends. Kunal believes that there could be some dips coming in and those dips should be utilized as buying opportunity. While Kush is a bit more tentative, he's suggesting a hold. So a bit of a mixed view coming in when it comes to the Bank Nifty this morning.
Well, let's go back to our techie guest as well. Kunal and Nooresh both are with us. Kunal, one important thing to watch out for today. Adani stocks really cracked yesterday. PSU banks cracked. What is the thing to watch out today going into expiry?
So one, I think, is 17,500. See, on expiry day, generally the option activity is the one which holds a lot of prominence because there are option traders, and especially on the round strikes like 17,500, 39,000, 40,000 on the bank Nifty and 18,000 on the Nifty. These are round strikes which hold a lot of prominence because that's where option writers, either on the call side or on the put side, they tend to have a lot of positions open. Now, for example, yesterday on the data, it indicates that 17,500 puts has one of the highest strike in terms of, is the strike which has the highest amount of open interest built up. That indicates that the 17,500 mark could probably be protected throughout the day. Even if there are dips towards the 17,500 mark on an intraday basis, I believe that those dips would be bottom too. The other way to look at it is how are the rollovers panning out, because after last 2 days of price action and the sharp correction, it's bound to dent the rollovers for the index futures. Long rollovers may not be as strong as probably one would have expected maybe a week or back when the markets were consolidating. So I think these are the factors which I would probably keep an eye on.
Okay, those are the factors that you're keeping an eye out on, but let's keep an eye out on some of the stocks which are also reacting to news flow, at least expected to react to news flow this morning. Lemon Tree, of course, is reacting on the upside with that news of the new property coming in on Bhopal. SpiceJet is higher by 1.8% because the dues are now being converted to equity, so that balance sheet pressure goes away. Greaves Cotton is also in focus on account of the leadership changes, but on the downside, it's Z Entertainment that deserves mention. A 5% cut is what the pre-open rates are suggesting, so that NCLT proceedings which have happened is something that is putting the pressure on that particular stock, and we'll discuss that in greater detail as well. But Nooresh, just wanted a sense from you with respect to Z Entertainment and ITC as well, because that was the stock that was clearly outperforming yesterday.
So Z is back to the place where it all started from. So it's very difficult to make a view here, given that the trend has now weakened. The last hope for the stock was at 210 to 20, where it stopped in 2022 a couple of times. Before the whole Z-Sony merger and the other announcement, the stock used to trade at 180. And there was a big gap up at that 180 to 200 mark. And we are going back into the same zone. So again, getting into a sideways period of time going forward. So out here, no views till the time it doesn't flip back about 220. Once it does that, that is the time for reversal. So for now, would not be looking at a buying on a dip here. ITC, the trend remains strong, but 400 to 425 zone going forward should be a zone to actually start booking profits. The stock has done a move from 200 odd levels. The trend is still positive, but it is getting us into a slight overbought zone. So at 380, would not like to participate in the last 20 points of a move in this case. But overall, the trend is still positive. So not a short here, but looking as a profit booking zone at 400, 420.
Okay. In the meantime, let's just look at the trade setup then once again this morning. And it's the Fed commentary which has been dictating the market mood. Stale commentary, but a little bit of a hawkish stance, one would say, although the Fed officials do admit that they cannot go on with as aggressive a hike as 50 basis points, even though a few of the Fed officials did believe that a 50 basis points is what they're going to be backing. But almost all Fed officials did back the 25 bips hike in the last meeting. The ongoing rate increase they feel is appropriate, and they also discussed, more on the stress drawn out debt limit talks, which currently they do see as a risk. They also say that upside inflation is a key factor which is shaping the market outlook from here onwards. That said, just looking at the market texture right now, seems like at least we'll manage to stall the fall, looking at the SGX Nifty or for that matter the pre-open rates. But remember, it's expiry as well, so don't know which way the wind is really going to move. And let's see where we head and whether we manage to defend that 17,500 print for ourselves or not. On the opening, at least we've managed to latch on to that. It's an absolutely flat start once again, 17,567 on the Nifty spot. Flat for the Sensex as well, just marginally higher, actually not even marginally higher, flat again for the Midcap index as well, flat for the Nifty Bank, no move at all. I can see some spot of green when it comes to Nifty IT at least. So let's start off with those newsmakers and let's see what Sonata Software is up to, considering it's their largest acquisition in their history. It's an all-cash deal that they're going to be putting in to acquire Quant Systems. 1,300 crore rupees is the sum money. Sonata will just come up for you on your screens. I want to see what Z is up to. The NCLT has admitted IndusInd Bank's insolvency plea against Z Entertainment and Z has cracked 7% as we start off in trade right now. Orient Cement as well, the deal with Adani Power to set up the cement grinding unit has been quashed. There's delivery as well after that block deal yesterday, wherein Tiger Global has spared their 1.6% stake in the company. This happened in a block deal yesterday at 335. 337 is where the stock has opened today in a trade as we speak right now. Then, of course, there's Lemon Tree, which has signed a license pack for a 47-room hotel in Bhopal. There's Mahindra CIE, which has come out with its earnings. There's a Gujarat Gas as well, which has hiked commercial PNG price by another 1.50 SCM to now 49.50. So these are a couple of stocks which are in focus. What are the Adani Group entities doing? Adani Enterprises, Adani Ports, Ambuja after that big crack in the stocks yesterday. Today too, they continue to fall. Adani Enterprises is now down another 3.5%. Adani Power down nearly 5%. Transmission down 5%. 4.5% cut coming in on Wilmar, 5% down on Adani Total. I want to see what Ambuja as well is up to. Ambuja has fallen a lot less though, but still drifting in the red as we speak. What about Aditya Birla Fashions? Let's see what that is up to, considering this was also a rank underperformer yesterday. Fell another 5% yesterday too. And today as well, it's just mildly soft as we speak. And then, of course, the defensive, so to speak, in ITC, Oro Pharma, Glenmark, which actually held out yesterday. Let's see whether this outperformance is continuing or not. By the way, there's another block deal in delivery, and my sense is that this could very much be part of that Tiger Global paring down their stake in delivery. So a sizable block deal has transpired right now as well. IT, that seems to be the only gaining pocket, I guess, Anisha, right now.
Oh, well, yes, it's only IT which is doing a bit, and then of course there's some result reaction in the sense of Mahindra CIE, but the volumes, as you said, is highest on delivery, which has seen a bit of a block deal, and Z Entertainment, which is cracking as we speak, 6% lower. And what's also cracking is IRB Infrastructure. Yesterday we saw that sudden move of around 15-16%. Now that's getting corrected. And other than that, it's Prestige, which is cooling off a tad bit, and the Adani group of stocks that we really pointed out. But let's get the first trades going with our technical experts. Kunal, what's the first trade at the index level, or any stock-specific action that you're spotting?
So Trent is a stock which I would look to buy. I think 1330 approximately is where the stock is trading. That's a stock which looks attractive, has been more resilient as compared to the other mid-cap, large-cap names. So 1330 approximately is the level where I will look to buy.
Okay, Nooresh, what about you? What's your first trade this morning?
So buying onto GAIL India, the stock has seen some bit of a follow-up today as well. So around 97, 97.50, this looks good for a short-term trade.